It's no secret that crypto and this FTX crash are all over the news. I've talked about crypto a little bit in the past. However, in this video, I'm gonna kind of flip the script. I'm gonna talk about how much I like crypto and how you can utilize real estate to buy crypto without using any of your own money. I changed my tune a little bit on crypto because it's distressed right now and I do think it has value. You can change your mind. I'm not flip-flopping. You know, if you have a pilot that is flying your plane from New York to LA, and there's a storm ahead, they get new information, wouldn't you want them to go around the storm? That's what I'm doing. I have new information, and I think crypto can be a huge part of your financial future if you do it the right way, and if you do it without using any of your own money. My name is Sam, I'm a real estate investor, and I own $42 million worth of real estate that I've bought without using any of my own money. I'm a big real estate guy, and I'm a big debt guy. I love debt, and I love leveraging debt to create wealth, and I've been in the past not a crypto guy because I believe so much more in real estate. But with recent events and the fact that the crypto market is so distressed, I do think that there's a great opportunity to blend the two and set yourself up for massive wealth and short-term gains as well. Now I'm gonna go over the main reasons I love these two asset classes and how you can combine the two for an infinite return. Okay, let's start out with real estate. Let's go over the four main reasons why I love real estate. Fourth is my favorite by far. Number one is control. You control that asset, whether it's a single family rental, a commercial building, or an apartment complex, you control that asset, meaning you decide who goes in there, you decide how much rent you can charge, you take care of that asset, you can decide which banks hold your mortgages. You just have so much control. With most investments, kind of including crypto in the stock market, you just put your money in and you're done. You don't really have any control. But with real estate, you can control so many different things and pull so many different levers that if things change and the market shifts, you can pull a few levers here or there and you can make it not so negatively affecting you if something outside of you is affecting your actual asset or your real estate investment. Number two is scarcity. Mark Twain said it best: buy land, they're not making any more of it. Buying US soil is one of the best investments you have ever been able to make and will ever be able to make. Shoot, China bought over $6 billion worth of US soil real estate last year alone. They know that it's a good investment and the whole world knows it's a good investment. If you live in the US, you need to be investing in land because they're not making any more of it. So having something that is in limited supply is always a good investment. Number three is the passive wealth trifecta, and it is exactly what it sounds. It's three things that create wealth for you passively. Number one, real estate goes up in value every single year in aggregate. Yes, there's dips, but you look back at real estate over the years, it always goes up in value. So number one is value going up. Number two is the mortgage, your debt gets paid down by the tenant. So the property's going up in value and your mortgage is going down and you're not the one doing either things. So that's creating wealth for you. Number three is cash flow. If you do things the right way, you will net positive cash flow on every single property you buy. I make over $8,000 a day with just those three things. And I'm not even talking about the tax benefits of real estate either. Number four, and by far my favorite before we get into crypto, and then we're going to talk about how we can blend the two to create wealth for you, is leverage. Leveraging other people's knowledge like you're doing now with me, leveraging other people's money like you can do, like I do, to borrow other people's money to grow your wealth. It's pretty hard to go to somebody to say, give me $100,000 so I can invest in the stock market. But if you say, give me $100,000 so I can buy a solid real estate asset that I will pay you back in 6 months, $105,000, it's a much easier pitch. So just being able to leverage with real estate, everybody knows that 90% of millionaires are created through real estate, so use that and other people's money to grow your wealth. Now let's talk about why I like crypto and how you can utilize real estate and dollar cost averaging to buy crypto without using any of your own money. Number one is scarcity. Now there's a ton of different coins out there. There's always going to be new ones made every single day, but I'm just talking about the main thoroughbreds, the main crypto like Bitcoin. There's a finite amount. There is 21 million Bitcoins to be mined. Most of them have already been mined. There will continually be mined a little bit over the next several years. However, there is a finite amount. With the US dollar, they literally can just turn a switch and print more. There was more money printed in the last 2 years than the entire 50 years before that. You can't do that with crypto. You can't just create another 20 million crypto or another 20 million Bitcoin to be a little more accurate. So I just like that it's scarce and it's finite, unlike dollars and other investments that can just be inflated for no reason. Number two is diversification. Most people create wealth wealth with a few different streams of income and diversifying the wealth that they have created. Very few people just go all in on one thing. I mean, how many companies has Elon Musk started and grown and sold and all those types of things? Diversifying into a different asset class, which is something I'm doing now. I'm all in on real estate. I have some e-commerce stuff going on, and now I'm kind of dipping my toe into the crypto market with this unique strategy I'm going to talk about here in a minute. Number 3 is utility. Crypto just has so much utility with the blockchain network. It's kind of the cutting edge. It's leading the market on Web 3.0 and things like that. It's just in the future. It's high tech, and of course there's all these little peripheral things and all these little altcoins that probably aren't worth your time, but it has utility. There's so many things you can do with it now. It's a protected way to exchange money. It could potentially one day be a united world currency, which will help disrupt the Forex market. There's just so many little utility things that it's used for now, and so many potential utility things that it can be used for in the future as technology grows and people get more comfortable with it. Most people create their wealth by buying distressed assets and growing them and creating value with improving them, whether it be a business, whether it be real estate, or in this case, whether it be crypto. The crypto market is extremely distressed right now. It has gone like this over the past several years, and we just happen to be at a down point. I don't know the end game of crypto in 100 years or 200 years or even 50 years, but I do know, and I'm very, very confident that it is going to go up and go up a lot in value over the next 3 to 12 months, let's say. Buying something at a distressed value is never a bad investment. So I use other people's money to buy real estate assets that create wealth for me. If you want more information on that, check out this video above where I walk you through a property and show you exactly how to buy real estate using other people's money. Now let's get back to how I'm dollar cost averaging my cash from my rental properties to buy crypto. So let's keep this simple. I'm going to walk you through a Burr's deal, how I'm able to buy a rental property without using any of my own money, and then at the end we're going to have a cash flow every single month that you can invest in crypto, and it's cash flow that came from other people that you didn't have to use any of your own money to get or grow. So what you do is you borrow money from a private lender or a hard money lender. There's a ton of different options out there. Let's just keep this simple for this situation, this example. You borrow money from a private lender to buy a distressed property. Then you borrow money from that same private lender to fix up that distressed property. So now you have a property that was distressed. Now it's rent ready. You still owe the private lender money. The next step is you get the property rented. You get it producing cash. You get income coming in so that it is an asset that is now fixed up and rented. At this point, you still owe the private lender money. You take the property to a small local bank, and they will actually appraise the property and give you a loan, a mortgage for up to 80% of the appraised value. I'm going to do some numbers here in a second, but let's say you did everything right. You bought it at a discount. You fixed it up. That loan should be more than enough to pay back your private lender their initial principal plus interest. You might even get to keep a little bit as well. But then after that, the only place you owe money to is the bank, but it's at a mortgage at 6.5% over 25 years. That is a small dollar amount. So then the rent that you collect pays that and all other owning expenses. And then if you ran everything right, you should get maybe $200 to $500 of net cash flow at the end of every single month. So take that money or a portion of that money and set your Coinbase account to invest in crypto every single month. Dollar cost average it. You know, you don't have to go all in when it's low or all in when it's high, but start to put that money in crypto if you don't need it to live. I don't suggest anybody living off their cash flow from their rental properties anyway. Cash flow is not a wealth creator. The actual equity that you create over time is where the wealth comes in. But that cash flow you can utilize, I guess, to live a little bit, but I would suggest putting some, if not all of that, into the crypto market, especially if you're doing it now. And probably in the long run too. As you add more rental properties, just maybe put $50 aside every single month in the crypto market. Now, who knows what's going to happen? Nobody can predict the future, but I like to have perspective. I look at the past and see what's happened, and I kind of take an eyeball at what I think's how that is going to portray into the future. And personally, I think crypto is going to go up, and I think you can utilize real estate to put in crypto, and you can get 10, 20, 30x return on that over the next couple of years, and you're using cash flow from your rental properties that didn't use any of your own money to buy, plus you're getting the wealth of the passive wealth trifecta and all the other benefits with real estate. You're kind of getting your cake and you're eating it too. So this is an interesting strategy. I'm just kind of starting to process it and utilize it myself, but I think it's unique. And if you like things like this, if you like to look at things from different perspectives and get experience from somebody who's trying to grow wealth for himself and experiencing that and sharing it with the audience, make sure you follow this channel because I talk about this stuff all the time. I mainly talk about real estate, but my main goal is passive income and wealth. So I'm here to teach you do that. Make sure you're following this channel and subscribing, and make sure to follow me on all social medias because I talk about this stuff all the time. I happen to be a real estate investor that does social media, not the other way around. Think about it. See you on the next one.